There was a lot of worry with a lot of multinational corporations because they didn't know exactly what was a commercial secret. The activities of Stratfor and his 3 other employees were seen to be normal business practices, talking with the iron ore producers and trying to find out the best market strategies. And at first, this really rocked multinational corporations because they didn't know how to operate in China at all. They have decided this year in the negotiations, the iron ore negotiations that are ongoing, to instead of conduct the negotiations in China as they did last year, they're going to conduct them this year in Singapore, just to get away from all the chaos that happened last year during the negotiations. Furthermore, this sends a message to China. China thinks that they have some sway over these negotiations. They are, after all, the biggest importer of iron ore. But in reality, it is that demand that weakens them. Rio Tinto and the other big miners, Vale and BHP Billington, all know that China's demand continues to increase. They know that they have the power. But it appears that the negotiations are probably going to really revolve around South Korea and Japan. And China is either going to have to accept the deal that is made with South Korea and Japan or continue to buy on the spot market. We continue to see different stresses, for example, with Google, where the laws in China are different than what we're used to in the Western world, and we're seeing multinational corporations bump up against that law, and the result may be corporations actually leaving China. Most commodity traders are not going to leave China. The business is too good there. And as we've seen in the Stratfor case, Rio Tinto is still very interested in importing to China. But if you've got a business model like Google does, where you don't actually have hard assets in China or a super thriving business, then you might see people starting to question whether or not operating in China is worth it to them.